Are you in the trade? Are you still in the trade? Or are you out of the trade? Did you lose on this trade that you were up 5%? These are psychological questions to really prep yourself. And then when you experience those in the real live market, it's a different beast when we're talking about it versus going through those times as a trader. Man, like looking back at price action just since the beginning of the year, it's been so choppy across the board. Even prior to that, the opportunities, but I think short-lived opportunities, not really trends.
You just gotta really pick and choose your spots, huh? But that's our goal for as traders, right? Adapt to the times, bruh.
Exactly, market conditions.
Market conditions, which leads us to tonight's trading topic. Thank you guys for jumping in. Reed and Glenn here with Hawaii Trading Academy. We founded this as a place, man. Like I DM. I don't know if you guys know the story. Let me just share a little bit. I DM Reed one day, and I was like, "Yo, you trade? Oh, let's meet up. You on Hawaii? You in Hawaii? On Oahu? Let's meet up, dude." And at first, he almost didn't answer my damn message.
Skeptical. You know how we always get these guys in our DMs, though.
Anyway, we met up at a Starbucks, talk story, and from there, it launched off, and we stayed in touch, and finally launched Hawaii Trading Academy last year. We have over 14 years of trading experience between the both of us. We have survived. We crashed and burned many times during those 14 years, but
learned a lot.
Yeah, learned a lot, and we're hoping to provide some value and share some insight tonight with you guys, or continuing on, as you're part of this community of fellow traders all around the world. And going back to our focus this month, we're talking about crypto this month. We're just channeling a lot, some of the content here at Trading Topic Tuesdays, especially for February with crypto. Last week, or the first week, we covered the history of crypto, where it came from, very basic stuff, getting people caught up to speed. Last week, we were talking about crypto, and what were you talking about, bruh?
I'm trying to remember too.
Risk management.
Risk management. There it is.
Risk management. And then tonight we are building on top of that, strategies in crypto, right? Investing strategies. What does that look like? And how does that apply? Do we have to start from a new blank space when investing in crypto, or can we take what we know already and jump in to the crypto train, right? So hopefully we can help share some insight with those two topics there.
Before we get into it, I want to say, like, in the beginning when crypto first opened up, you only had a few candlesticks, so it was a little hard to take our type of strategies and apply it, because it was only one trend at the time, and it was only up. So, you can't really it's basically you're at that point investing into something you believe in or hope. And
Yeah.
That's kind of a dangerous to just trade off of hope.
It's like trading off of like just trading an IPO, yeah? Because it's very
right, exactly how it is. But now with the history that crypto's been around, now it's like strategies can be applied now and be successful at it.
Awesome.
So yeah, man, take it away.
Share, bro. You guys can see that, right?
Yep.
Let me keep your eyes on the road, girl. Okay, so we got the Trading Topic Tuesdays. Let me just jump to this. So what do I invest in? How do I do it? For people who are starting out in the investing space, there's a lot of questions to be had. These are some of the main questions. How do I do it? How do I start? They're just a reminder, there's set over 17,000 cryptocurrencies, coins, whatever you call it. It's out there. and it's growing. They're adding more, you know, and so
17,573
dang, what they just
cryptos,
added. I swear they added like another 100.
458 different exchanges.
Growing, growing economy or space. So taking it back to the whole term of investing, right? As we invest in crypto, we're anticipating to make a return on our money, right? And so here's some basic definitions. I like to use definitions at least so that we can share right information, because that is a key thing. You cannot make decisions with your money with incorrect information. That is a way to lose money. So investing, to commit money in order to create a financial return, that's what a lot of us are familiar with. To make use for future benefits or advantages. Or number three, to involve or engage, especially emotionally. And now this thing, number three, I see a lot of people doing that first. They get married to the position, huh? Yo, Dogecoin, all the way Shiba, all the way. I'm so emotionally attached. So those are the key definitions for investing when we are in the act of taking capital and applying it to whatever the vehicle may be. We're putting our money to work in hopes of getting a financial return. So what kind of investing do we have at 2022? I did forget one just now. I mean, you can add to this if I'm forgetting some, Reed. So
All right.
types of investing, we got real estate, single family homes, commercial, residential, offices, storages, trailer parks. I didn't know you can invest in trailer parks, but you can, and those are a profitable deal. We got the stock market, right? You buy Amazon, Apple, buy stocks and shares of those particular companies to hold for dividends and to hold for increase in value, like Tesla, right? Then you got hedge funds. You can invest in those guys. You can invest as an angel investor in a big startup. You can get some royalties, partnerships, nonprofit, IP, intellectual property, licensing, certificate of deposits, bonds, 401ks, crypto. The list goes on. The other thing I missed was NFTs.
Ah, okay.
Ah,
Yeah.
yeah,
Yeah. Yeah. I was
that's
thinking
one.
dividends, but yeah,
Dividends, but
NFTs.
that's
It's
stocks.
a new player on the game, though. It's
Yeah,
new.
brand new. I mean, so there's so many different routes we could go into with if we want to take our capital and invest it. There's so many things. One thing I did not put on here is the bank,
Invested in the bank.
like your savings account.
I wouldn't even. That doesn't even need to be put on there,
I know
man.
that's why.
It's just too loose, too
Years,
small.
many decades ago, and probably when our parents or grandparents, savings
Yeah.
accounts were paying what 8%, I believe.
Yeah, I was gonna say 8, 9%, almost
Yeah,
like what the S&P is paying now.
they pumping, man. So that's if you're always like wondered why our parents always told us to put our money into savings. I think that is where it stemmed from.
It made sense back in the day, right? I
Back in the
think it's like
day, man.
less than 1% now.
Dude, what is it right now? It's point
Uh,
zero 0.01 probably.
average interest rate.
Let's see
Let's
what you
see.
got, Reed.
Let's see. 0.06%.
Damn, zero.
The national average interest rate for savings account is 0.06%. That's why we want to teach people how to invest your own money. Don't let the bank, you don't need the bank to invest your own money.
Then they charge you to take out your own money, those suckers, you
Right.
know? Yeah, yeah.
But moving on.
Moving on to that. So I want to break down a the AT&T stock dividend. This is a screenshot I took from their website. On the right here, you see they have their dates. Every quarter they pay out a dividend of 52 cents a share for the past year. even maybe 2 years almost. Um, I wanted to just break it down for those who aren't familiar with, taking your initial capital. What does that look like, right? So if you look on the left, we have AT&T stock dividend currently at 24.34 per share. That is about 3 drinks at Starbucks. Okay, you could buy 1 share.
I like how you put that.
You like that, huh?
Relative terms. Got it.
Yeah, yeah. So three drinks, right? When you go buy your friends drinks, you'd be like, nah, I'm not gonna buy you drinks. I'm gonna buy 1 share at AT&T instead.
Yeah.
And then let's just take that up. So right now that's the current price. I googled it. It's right because Google said so. But 24.34 per share. If I own 1 share, I get 52 cents um, per 1 share per quarter. So there's 4 quarters every year, right? So if I were to spend $1,000 into AT&T stock, that would get me about 41 shares. Maybe less because maybe your broker or exchange is, charging a little more than they should or whatever. Okay, so let's just use this as an example for those. Say you have $1,000 laying around. Your bank is paying you 0.06% average. It's probably less over here because Hawaii, we get different standard. I don't know why, bruh.
Different standard, yeah.
It's like the fast food commercials, right? Not applicable to Hawaii or Alaska,
Yeah, yeah.
yeah.
Or win a trip to Hawaii. What do Hawaii residents get, huh? Going Vegas, I guess.
So if I buy $1,000, I get 41 shares, and what I did was simple math. I did take the 41 shares times it by 52 cents per share, and then my dividend payout is gonna be $21. Boom! I can
That's
go ahead
2%,
and buy.
right?
That's about what was that
2%, right?
per quarter? Yeah, yeah, 2%
Yeah.
ish,
Per
right?
per per quarter.
Quarter, yes. So
Again, 0.06 in your savings. So if you invest it, you'll get much more out of it.
And this is historically this is the screenshot was taken from AT&T's website. Um, they have a track record of all of their dividend payouts, which is cool. It's cool for a company. Usually, when I think of AT&T, I think bad service. Don't quote me on it, but a lot of friends I have, they have trouble with it. But they pay out good dividends. So I ain't even hating, man. So we take this example onto the next, right? Say I got my $1,000. It's paying me $21 every quarter, yo. I'm like, yeah, this is how you do it. Now you can go buy your Starbucks. Why? Because you're using your dividend money to pay for it instead of earned money. More on that later. We'll talk about that later. So $21.32 every quarter. You times that by 4 because there's 4 quarters every year. That's about $85.28. You do the math, dude. 0.06 on the savings account. We're getting AT&T is 8.5. That's pretty
That,
good.
a lot of people will say like, "Oh, that's only $85." We're adults. Like, what can I get with $85? Just add an extra zero to that 1,000, and then that's another. Just add zeros everywhere, basically. And I love dividends. So that's one of the things that really got me into the stock market. And when I was researching it, it said if with a $3 million account, your dividends will come out to $100,000 invested properly with the right stocks, though. But you're making 6 figures doing nothing, literally nothing. And so I think that's what I want to like have you guys imagine, traders imagine, just having a dividend portfolio alone can help so much. Think of emergency funds. Like if you needed to pull that dividend, all those dividend gains out also, like, that helps. So anyway, I love
Mm,
dividends.
that's a good point. Yeah, you just so I don't even know what the percentage is. It was 3 million. You make six figures. What is the percentage on that return?
3,100,000. So what is
I need a
1% of
I need
1 million
calculate.
is $10,000. Uh, three $30,000 is 1%.
3%, 3.3%. You have $3 million paying you 100 grand a year. That's 3.3%. Now, that's a yeah, that's lower than the example we're using with AT&T. Imagine if
Yes,
you had $3 million
in
paying you
AT&T
eight
alone.
point. Let's see, point eight. 8%. You get 240,000 a
We can't
year,
see the
man.
calculator though,
I
but
know. I'm
yeah, it's
yeah.
oh, my bad.
No, all good, all good. So
Yeah, yeah.
$3 million invested in AT&T equals $240,000 dividend yearly.
That's amazing.
Boom, you go Disneyland as much as you like. So that was just one of the things. I mean, now we're gonna bring this back to the topic, which is crypto and strategies. So this is a strategy, right, for investing. It's not strategically trading, but in a way, you are putting your money to work, and that's what we do as traders. And so, let's shift gears into the crypto space, right? So, when we are investing, we have to know what we're getting into. So, we laid out some things with the crypto space that we've noticed, observed over time, and experienced with the pros and cons, right? So pros, I mean, there's a lot of good things about crypto. It's a new technology. It can massively increase in value, as we've seen with Bitcoin, lots of the other coins out there. It started at decimals behind the penny, and now it's banging. So lots of increase in value in such a fast time. Fast transactions using the blockchain technology, right? Instant almost. Ease of access. Anyone can open up a crypto wallet or open up an exchange um, account at Coinbase or Crypto.com or Robinhood or whatever, and you don't always have to be an accredited investor. Now, there's just to kind of shine some light on that term, accredited investor. I think they updated the terms. You have to either be making 250 grand yearly by yourself, or have a net worth of over 1 million, I think, in assets, in order for you to be considered an accredited investor. Now, when you get into that, when you get accredited, you get access to different deals compared to the unaccredited, non-accredited person. There's all these rules and regulations out there, and so with crypto, you don't necessarily have to be accredited and to invest in it. There are a lot of wealthy people who are investing in it. There's also lots of people who don't start out, I mean, who start out not wealthy but end up wealthy through crypto, right? Another pro about it is increasing your network. You get in different conversations with that. The crypto conversations don't always end up at Wall Street. You know, you can just talk to random people and they'll just be crypto whizzes, man. Blockchain experts in the random places. The security of blockchain is awesome so far. It's very new technology, secure. It is a public ledger, and it's documented well on the blockchain. And the other pros of owning crypto is that you're able to stake it. You want to elaborate on that, Reed?
Yeah, so basically you invest that let's say $1,000 of Bitcoin and you stake it. So the exchange actually has it. It's not in a or your wallet per se. It's actually in the exchange's wallet. So that it's a pro and con, but I would consider it more of a pro because you get money back. And these are what is it called? Like FDA, FCC established, SCC, excuse me,
Mm.
established crypto exchanges, and they're allowed to do that legally. And of course, if they hold your money hostage, then uh, they'll be in trouble. So I mean, that's it. And what from what I've experienced is that only SEC like actual regulated exchanges are giving these interest these earning interest back. So yeah, you get a certain percentage back, and it's based on the value of the crypto. So if Ethereum drops and you have $1,000, it'll drop down to 800 or something, and your earned interest also drops, unfortunately. So there it is a little pros and cons, but in the end you're gonna be walking away with a dividend essentially. It's like a dividend. That's it. That's what that is.
Yeah, I
And
think that's a good
and it,
point because I think in the stock market, similar, right? With AT&T, if their price goes down, I believe it affects earnings, right? I mean,
it'll
dividends,
affect the earnings, but not necessarily the
dividends.
dividends. So a lot of companies will suffer, like CEOs and stuff. They'll be like, hey, you know what? We're not gonna pay ourselves. We're gonna pay the dividends first before because when a company starts to lower their dividends, that's like it's a bear market for them. You know, it's a bad sign if once they start going down, taking away dividends. So their goal is to always increase in dividends, even just by 1 penny. You know, and it looks good for investors. It attracts new investors. So it's a good overall to keep that dividends. It's a red flag when they lower that dividends. So not too much, but with crypto it is. One thing also, one pro that I really like, it kind of goes off of it can massively increase in value. I know like a lot of young investors, I'm talking like high schoolers, they've invested in crypto at such a young age because they see the potential. They literally, it feels like that's their only way out of, the rat race. They don't have like that business mindset just yet. And then I also read like a lot of stuff on, like Reddit and blogs, and like people in the third world country, it's a sense of freedom almost, like just putting in that little amount of extra money into a crypto exchange makes them feel alive and like hope. It makes them feel hopeful. So it almost has a psychological aspect of just investing in cryptocurrency. And not saying that works for us or everyone. I'm just saying like that's also a pro. You give a person a little bit of Bitcoin in a third world country, that could be a game changer for them.
Mm. No, that's right. But I feel like it's a double-edged sword, right?
Oh
Because
yeah,
they get the
absolutely.
confidence if it's going up, and then what happens when it drops,
Yeah, because they're putting all that energy in hope and
Yeah.
the future, that, and then if it does collapse or something goes haywire in it, in that sense, yeah, it could be very dangerous.
They're invested emotionally, and that's
Yeah,
a
but
tricky thing to do. So
but
going back to that, I mean, the cons, it's volatile, right? Bitcoin hit a high of 69,000, hit a low of 32 recently this year, I believe. And that's a big jump. That's 50%. 50% drop. Um, People want to say the value of the dollar is consistently dropping. Yes, it is. It is. That's a fact. But it has we're able to price goods and services based on the US dollar at this moment. Bitcoin otherwise, if you're trying to buy real estate with Bitcoin, and let's just say a house was 69,000, it took 1 Bitcoin, you know, and say you're trying to transact that with the seller, and then price overnight drops to 32,000, and he's gonna be like, "Yo, you owe me another Bitcoin." Oh, two and a
mm,
half actually. You know, price went up for Bitcoin. I mean, you owe me more Bitcoin because the value went down, and so that is the thing that we have to consider with using that going forward, right? Right now, there's no major tax benefits with crypto. The government, they hungry, man. They on the hunt. They are trying to figure out where the regulations are, what is accounted. They're trying to go for, at one point, they were trying to go for unrealized gains. And that's a big thing. And just to touch on that unrealized gain, say you bought in Bitcoin at 10 grand and you're still holding on, and right now it's trading at like 40,000, so you 4x your money. Imagine the government coming in, you didn't even cash it out yet, you didn't sell any, right? But your initial investment was 10 grand, it's sitting at 40, and imagine if the government's be like, yo, you owe us
20% of that.
35, yeah,
Yeah,
30% of that,
35%.
of your gains, you know? And so that's something you gotta figure out and going into it. They haven't, good thing they haven't implemented any of that yet, but that's been talked about. I think they're just trying to psych out some people, man. That's what they do over
Definitely.
there. Another thing is you can completely lose all cryptocurrency. In event of losing access to your wallet, say you had it in cold storage,
What's
right?
that?
Because cold storage, we are talking about that a few weeks ago. Cold storage is when you take your cryptocurrency, your Bitcoin, your Ethereum, and you take it off of the exchange like Gemini, and you send it to your wallet. And the wallet could be in the form of, do I have a USB around here? Could be in the form of a USB. You plug it into your computer, load your Bitcoin under, take it out, store it underneath your pillow, and it's there. It's gonna be there. It's safe because it's not on any networks. It's no one can really access it unless they physically go in. And I think even if you physically have it, there's a special key password thing, yeah,
Yeah, yeah.
open it up. And who's great at passwords, bruh? And nowadays, without even like who remembers all their passwords
Oh,
without
you're talking about the
cheating?
owner. Yeah, the
Yeah, yeah.
owner.
As an owner, we
Yeah.
have many accounts just with regular using the computer, right? Google and all that. Dude, this is another thing you got to add on to your little cheat list of sheets. And this password, this particular password, you don't want to store it in your iPhone notes.
Mm-hmm.
You know, you don't want to do that because it can get hacked and whatnot. So, that's a con. That's a con. That's something I'm sure there's ways around. People just got to be more responsible, I guess. That's what it comes down to. Figure it out. Lots of scammers out there. Scammers taking advantage of the people who aren't really versed in investing, who don't have the know-how with crypto. So that's out there, and I've had many of our friends get scammed because they just didn't know enough. The person sold them a dream or a vision, and they jumped for it. Yeah. Another con of crypto currently, you can't borrow against your own crypto portfolio. So for what I mean by that, with real estate, you can leverage your current real estate. You can go ahead and refinance your property, and the bank pays you that money against your property. And with your crypto portfolio, I can't go to Gemini if I have 10,000 worth of crypto right now, be like, yo, pay me 10,000 because I know the value is gonna go up. They'd be like, no, crazy. So, going back to the different benefits of holding these assets, crypto does not fulfill that spot. You don't want to put margin against crypto, just going off of the borrowing it. So creating a margin account, leveraging your account. Now in the forex space, there are some brokers that give you tons of leverage, right? 100 to 1, 500 to 1, some crazy stuff. We don't recommend it. And what that just kind of means is your dollar goes further, right? Like you're trading.
You're basically trading with money you don't have. That's really what that is.
I love the way.
That's what
Yeah,
leveraging is.
there you go. So with the crypto, currently, I don't know. To my knowledge, I don't think there's any exchanges that offers margin trading for crypto. And lastly, it's limited, very limited uses of crypto at this time. You can buy wonderful pieces of art, some basic
NFTs.
crazy art selling for millions. But you can't go and buy groceries, man. You can't go to Whole Foods, can't go to Safeway, can't buy some poke.
Yeah, for
At
the
this
most
time.
part, it's not like really commercialized, but I mean there are like small mom and pop stores that do, offer Bitcoin payments, but it's not widely adapted, unfortunately. So even if like they did offer it, you got auntie and uncle coming through, they're like, I don't know how to do this. You guys take cash.
Yeah.
um,
I get the real coins,
yeah, yeah,
nickels and dimes.
yeah.
uh, so those are kind of characteristics to consider with investing in crypto. Okay, you know, and so we're gonna jump onto different strategies, different approaches for trading or investing. And you can apply this now that crypto has more of an established market. Lots of good exchanges out there. They're being regulated, and there's more volume. That was the biggest thing. Volume, price action, more development. We can now go ahead and just trade crypto as we would trade Euro, USD, gold, NASDAQ. So we've gone over the dividend strategy, or the just a buy and buy
Earn.
for dividend returns. Now we can talk about different things. So we got day trading, right? We got scalping, or using a short time frame. You're going to be entering throughout the trading day. So for example, we have the New York market opens up at 3:30 a.m. our time about, and it closes at 11 a.m. I believe our time. So within that time frame, you're going in, buying here, hoping to sell at a higher price, shorting at a low price, and hoping to get out at a lower price. And so you can be in it for a few minutes, a few seconds, or a day. I mean, a few hours. We got swing trading, which is another type of strategy you can approach the market. You're gonna be using. So we put down an example of like a 20 to 50 EMA crossover. So you would use a. It would just be a. Those are indicators that you can find on your TradingView chart, and you can just trade off of that, and you just let price let do your thing. And so those trades you would typically hold from days to weeks to even months, depending how big your initial time frame is. You got the buy and holders. That's almost like similar to what the dividend investing is, right? You're just buying the company and you're holding it because it pays good dividends, or you're holding it in anticipation of this, you know. And over time, or you're solely invested in a company, you're best friends with the CEO, and this is going to be a good deal. So you just go in. And so you can even, approach this. Say you had earlier access to invest into the company. Those people who were able to get into Facebook early. All those companies. They just held it throughout the years, let the company grow, exited out. Jeff Bezos' wife. Damn, she had the biggest score, man.
Yeah.
And then you got
I
the
read that
whole.
she
Oh,
gave
go.
back more than whatever Jeff Bezos ever contributed in his lifetime so far. Like she gave back more in like 6 months or so. However, the time frame of the divorce to now, she's given back more than Jeff Bezos has ever given back.
Or donation type.
Yeah, as far as donations, community building, and
That's
all
awesome.
that. Yeah,
Good
it's
for her.
awesome. Yeah, for sure.
Yeah, yeah. And you got the hodlers, man. Hodlers. They just, they don't care what happens. They never getting rid of it or crypto. This was born from the crypto space, right? I didn't hear this from any stock people or forex
I
people.
actually learned the history of this. So online, someone accidentally misspelled, "Hey, what are you gonna do with this drop?" It was like one of the first drops in Bitcoin, and they said, "I'm gonna hodl." Like it was a comment, and they're like, "Hodl, what does that even mean?" And like people just started. It was viral. Like people took it as joke and ran with it. So it stands for "hold on for dear life." That's what like the example is. Um, but yeah.
Hold on for dear life. And to wrap up the conversation of tonight, just key takeaways. Of course, we're not professional financial advisors. We want you to use your due diligence, which is why we're presenting all of these different topics and information for people to learn, right? Make wiser choices when putting their money to work, right? Ask questions. You want to learn, ask questions, and especially if you guys have any questions right now, you can put in the chat or come on, and we'd love to answer it. And you want to make your goal, make it a goal to not be making tons of money, not be the CEO, the boss person. Dude, be the investor. Make it a goal to be an investor,
That's
right?
the guy that's bigger than than just the boss, right? Or even the owner. You want to invest in a company.
You want to be an investor. I don't know if you guys ever read Rich Dad Poor Dad. He got the four quadrants, right? You got the
Mm.
employee, employer, business owner, and investor. You know, the four quadrants. And the goal is to jump all to the I side, which is in the investor side.
Yeah.
That's where we can just stand back, put our money to work, put our 3 mil, 30 mil to work, be the board member, help make decisions, and then just sit back and let your money do your thing.
Can you pull up the time frames again, or the different type of strategies on how to trade crypto
Yeah,
real quick?
yeah,
That phrase.
yeah. Let me go back. So you got these, right?
Yeah. So for day trading, it's usually, or like scalping specifically, you're not holding on for a day. That's usually like the time frame there. And then swing trading, we mentioned the 2050 EMA crossover. So they're two different indicators, but they're two different um, numerical indicators, but they're the same indicator. And EMA stands for exponential moving average. So just those are like a couple things I just wanted to add a little more value so you guys could take away a lot more than that for that. And but one thing I want to mention is like with these strategies, you could start in a scalp, and if that's your entry, and then become a swing trader, or that trade can become a swing trade. So it's all dependent on your personality. That doesn't really float my boat. I'm not sure, Glenn, that's not really your style either, right? You don't scalp and then hold
No,
on to a swing. You
no.
go for it and hold. So
Yeah,
um
that's a good
yeah,
point.
that's just a few ways to trade, and that's what we mean by strategies. That there's all kinds of ways to enter these markets.
Yeah,
Entering the market's the easy part. Actually, it's the easiest thing. I'm telling you guys, Glenn and I, from experience, the strategy will be the easiest part of your whole trading career. It's that risk management and that psychology. Those are the two killers. That's where 90% of traders failing, that's where those two come to play, is the risk management and the psychology. So
yeah.
that's
That's that's great, bro. Like
yeah.
like anyone, like let's say we had a crystal ball and be like, you know what, Bitcoin's gonna be at 30,000. You buy at 30,000, and then say everyone gets into it, price jumps up. What happens? What do you do next? You got the prime entry, you got the perfect entry, your strategy. What's next? What do you do when the price does that? When it skyrockets 5 times, then it drops, 50%, only to go up 150%. what do you do? What do you
Are
do?
you at this point? Are you in the trade? Are you still in the trade, or are you out of the trade? Did you lose on this trade that you were up 5%? You know, these are psychological questions to really prep yourself. And then when you experience those in the real live market, it's a different beast when we're talking about it versus going through those times as a trader. And so, like, I mean, coming back to how Glenn and I met, that's one of the reasons why we wanted to start this is, there's so many people who claim to be traders out there, and they say they're making 100% a month consecutively. And from not only from our experience, we're talking market wizards, guys, like guys who've written books and books, Jack Schwager, Mark Minervini, all these people, all these great traders, Mark Douglas, 100% return month to month consecutively. Every investor in the world will want to meet this person. So just take away that, like it's not that easy. So, and that's why we wanted to bring light to like the realities of trading and how to navigate the trading journey.
Yeah, yeah, and we're not saying this to somewhat discourage
Yeah.
people with continuing their journey. There's a lot of pros. The goods outweigh the bads. But
Amen. Yeah,
through the
absolutely.
struggles, that's where we will become better, right? That's where the growth is. That's where the wisdom comes, the discipline, the consistency comes. Now, it's no one said this investing is gonna be easy, man.
Yeah. Like that, just since meeting Glenn, like my trading has gotten so much better. My discipline to my plan has gotten so much more um streamlined. So that's why, like, again, like just that community. It is possible. Like nothing's impossible in the market, which is so amazing. Like you can have 200%, 300% returns in a year. But we're just saying, like, be wary of those type of educators. That's all. We'll never claim to be making 100% back to back to back months. So
Was this good, guys? I mean, was anything resonate with you guys? Feel free to share. We'd love to hear your insight. What comes to mind when we're talking about these topics or these subjects? Other than that, hey, I want to read. You have your charts up. Pull up like
yeah, I do believe.
a crypto coin, like a Cardano, or let's see what the price action looks like. That way, we could kind of just share like the day trading versus swing trading type
Yeah,
of
okay,
deal.
yeah. Good idea. So this is the daily chart I have. This is the Bitcoin. I went long on this position after the breakout above the 200 EMA here, or 50 EMA. And this is what we mean by the like crossovers. So this I do use the exponential moving average. But I use different numbers, 250 EMA, and I don't do crossovers either. But generally speaking, like you would trade, that's how you would trade it. When the EMA does something with price, that determines your action. So but yeah, so day trading, you would enter at on a day, and
So
then you
we'll
would hold it.
zoom
You would
in.
hold it.
Yeah.
Say again?
What is this time frame around? Daily?
Yeah, so
Would we
this
want
is
to zoom
daily.
in? Would we want to go to a smaller time frame?
Yeah, so if we go like intra, we could go intraday trading, right? So this is the 15-minute chart. So there's just a lot more candles. There's a lot more data when you go in and you zoom in. Look at all that candle. I have to zoom in so much. So this would be intraday trading. I'm at this is the 15-minute mark. So like in an hour, this is how much it's moved. Prices moved this much. How much is this? And like I don't even know the ruler. Let's see. So moved up like I can't even tell, like 100 points, 14. No.
Let's see.
Anyways, so yeah, it moved from it moved 15,000. It says right there, in like a in 15 minutes, which is insane. 15,000. No,
15,000?
11,000. Sorry,
Oh, I was gonna
11.
say, bro. 11,000?
Yeah,
That's still a lot, bro. For
I mean,
that.
yeah, it's 11,000, right? That's a lot. So I mean, if you were trading this, let's say you had one Bitcoin and you bought in at 47K, and then it went up to 48K, and then you stopped and you got out, you just made $10,000 right there, and so that's what would be the power of intraday trading. But I want to zoom out again, take it like give a little perspective. If you did like this.
Femlin, well, real quick, Femlin has a question with candles open and close.
Oh yeah,
Love
go
for
ahead,
you
go
to
ahead.
would love for you to elaborate on that.
Yeah, for sure. So, and open and close. So like when this bar closes, if you can see my mouse right here, I'll do a image. There's like a circle.
I wonder if she's talking about like just the components of a candlestick.
Oh yeah. Yeah, can
Maybe.
you elaborate a little? Open and close. So I'll just say close. So this is when the trade closed, the previous candle closed, the bottom one. And then the following candle, this is when the new open of the new candle. It dropped down, which is why you see that wick. It drops down a little bit and then it went up. And then it closed here. And so that's how the candles work. It's a close and open. So since we're on the day, so this is a 24-hour, each candlestick is 24 hours or a day.
Hmm.
And so when this and the wicks show the price movement throughout that 24 hours. So like this candle right here, for example, I know it's a little ugly here, but that candle, this high test reversal candle, it went up, then rejected the bulls and dropped back down and closed right here. And then the following candle is a doji, and then it opened here, went up a little bit, closed back down, and that spread right there, that's how price open and price closed.
Let's stick on that doji, right? So we
Yeah.
have different components of the candle. We have a high of the candle, which is a top wick. Then we have the low of the candle, which is a bottom wick, and then the middle
Right.
part, which is that's where the bigger, thicker green is going to be the body
Yeah,
of
the body. There you
the
go.
body.
I'll
And
bring it
so
on
I
the
think
body.
in one of we've done a whole video with dissecting the components of the candle, and there's different
On the
types too.
network as well.
Yeah, in the network. So, but that's a good question. I mean,
Yeah.
I hope that answered it. The different components, and yes, candlesticks, they do tell a story, and you can make trading decisions on it, but you have to be careful with um, making your decision alone based on the candle. You
A
know what I mean?
single candle. A
A
single.
single, yes,
Because
you
I mean,
can.
like there are traders who trade candles purely, but it's not just a single candle. They do use like at least 3 or 4 candle formations, and then on top of that, a bigger formation. And so they use it. It's like one piece of the puzzle.
Mm.
Candle identification is just one piece of the puzzle. I focused a lot on candles, a lot of energy in the beginning because I thought candles were like everything, like every time you see a doji, that means price doesn't know what it wants to do. That means it's a reversal. So like I would reverse every single doji only to realize that there's a lot more to it than just one single candlestick.
Yeah, yeah,
Look
and
left. That's a good advice for one thing that
look
I've
left.
learned is look left before placing a trade. So a low test or a doji in a certain area may not do what I guess the average of what a doji would do. You got to look left. Is the market consolidating? Is it correct in a correction, or is it in a trend?
Right? Look up what market sentiment or what market cycle it's currently in. That way you make your decision. Um, so you got all these different components, and you gotta know how to use the information from each component to create a decision. So, well, what do you got? ADA? See
This
that?
is
Little mess.
88.
Okay.
Is 88 Cardona? It
It's
is.
Cardona, right?
Cardona,
Yeah.
Cardona.
Yeah. Let's look at what's a newer one? Shiba? Let's look at Shiba. We see how different it looks. I think you have it on your list.
Oh yeah, I see it. I see it. Oh,
Yeah.
so this is cool. TradingView updated it and gave images on how the
Oh,
coin looks.
oh,
Just
okay.
a random note. I saw that the other day. It was pretty cool. See, TradingView is the best, guys. Nah, I think yours had that for a long time, man. You have images of stocks and everything
Yeah,
on
they're
TikTok.
not so heavy on the crypto side yet. Yeah,
Oh, okay.
yeah. Oh, is
Honestly,
that zoomed out all the way?
like price action looks nice, you know?
Yeah. Like I
I
want to
mean,
see the beginning, how it looks like in the beginning, so that way we could kind of just show what like an up and coming a new light volume type of crypto. Yeah, you see that? So we got the big spike in the very left coming down, then it just went sideways for a good period, then it just
so
popped
this
up
is May
again.
2021, and the first pop was October 2021. First,
I
so
see
almost
that.
6 months, half a year to do something.
Right. And so yeah, that's price action right there, You can kind of see. I mean, it's not a real pretty site or coin to invest in right away, because of that. If you're if you're familiar with technicals and you're just looking at that sideways price action, there's nothing to really pounce on until it breaks out back in, like you were saying, in October, right? We got big green candles there.
Yep.
Yeah. So I mean,
This is
those
when I
those
was
are.
told to get in.
Well, what price was that? Oh, at the time, right there, the first
I was
thing.
told to get in like around November, October, November.
And you didn't listen, bruh?
No, man, they told me I was missing out. So it's all good. It's all good. No, when someone does tell me something like that, and they know that I trade, I really do hope the best for them. Like I just tell them, be wise with your money, man. Don't put all of it in there, and I really hope it does go up. If it goes without me, I don't mind, but
Yeah.
if it goes without you, it sounds like they care a lot more. You know what I mean? So because they're emotionally invested, and that's what we want to ingrain into you guys is like, don't be emotionally invested to the markets.
Yeah.
Detach emotion. It sounds really robotic and hard to do, but I mean, the emotions are always going to be there. Don't get me wrong,
Hmm.
but it's just don't trade off of that emotion.
Yeah. Yeah. And you're gonna learn how to sense that. Um, when your heart rate starts getting faster, your palms start sweating.
Your
Maybe
body
it's
gives
not a,
signs.
it's not. Maybe it's not a good time to click that send button. Maybe step away from the desk, do some jumping
Yep.
jacks, go cool down.
Dude,
You
from
know.
experience, be sober. Don't trade drunk or high.
Not the kind. Oh, hold my beer. Watch this.
Yeah, yeah. Watch them. Gonna make money. Watch them. Watch them.
Or even like first thing in the morning, right? Don't be sleepy and trying to approach the market,
Yeah.
right? Or if you're lacking of sleep,
Fatigue.
those.
Yep. Sleep fatigue. Decision fatigue. You
Hmm.
make the wrong decisions.
Just a reminder, like you're going up against the top minds in Wall Street. You know, we got
And robots.
robots, AI, quantum, freaking quants. They call it quants. The professors that study this. You're going up against all that. Big banks, J.P. Morgan, Goldman, Blackstone. They were just little shrimp cruising along, and you got these big whales. So yes, there is always. I think they call it a zero sum game. Every For every winner, there is a loser on the other end.
Because the dollar that goes into your account, you're taking away from someone else. That's
Hmm.
that's why it's called a zero sum game.
Yeah, and we don't feel bad when we take the winnings. It's just the way of the game.
It is. Like I always like yeah. When I first heard that, I felt really bad. Like man, I kind of don't want to be a trader because it sounds such like a dick thing to do. Like a horrible thing. But then if you use that income, that profit to do good, then I mean, in the end, it's a win. So that's I justified that. Like okay, if you just gotta put your money to good. Give back to the community, start good things.
Yeah.
But anyway.
Yeah. And as we wind down the conversation, just to recap, we talked about um, the different things of investing, the different strategies with crypto, the different characteristics, right? It could be volatile. There's not too many big tax benefits with it compared to real estate or having a business. Those capital gains will be taxed at a higher rate, you know? So there's all these things to consider. You have to do your due diligence. You have to ask the right questions, be in the right conversations, learn. Don't be lazy. Don't be the lazy investor, right? Lazy investors never make it. So on that note, guys, thank you guys for jumping in. Please, if you guys have any more questions, reach out to us. You know where to find us. Y'all have a good night.